How's everyone doing? Today, I would be doing something slightly different. I usually spend a lot of time around content on financial statements and analyzing results. But let's dial things back a bit and let's look at I would say maybe a softer topic. I'm looking at stock investing in your teens and 20s. Should you approach it? And here are a few thoughts I have. First is you want to focus on growth, right? Focus on growth stocks. And I think I have a podcast episode on Spotify where I go into more details. So I'll probably plug that at the bottom comment section. So you want to focus on growth. While growth stocks may not provide immediate cash returns, they more than make up for that with capital appreciation. And capital appreciation simply means the value of an investment increases over time. So, to give an example, let's say I bought shares of GT Bank, then as it was then known. I bought GT Bank shares, maybe I bought it 5 years ago at say 25 naira or 18 naira, right? Let's say it was trading around maybe 15, 16 naira. I think it was a bit less than that. And you fast forward now, that stock is trading at 70 naira a share. So it means if I bought at 18 naira, I'm holding it at 70 naira a share. Within 5 years, I've made over 100%, if I over 200% on my investment. And this is a true tale. So you want to focus on growth stocks because you have the luxury of time. Why pursue cash when you can pursue growth? Because capital appreciation at the end of the day will make you more money than dividends, right? Dividend returns are probably what 2, 3, 4, 5%. Global markets, Nigerian market, you're probably doing 7, 8, 10, 11, maybe as high as 12, 15% in a single year. But if you're able to make it 200%, 150% return in a couple of years, that more than beats that. So focus on growth. The next point is that you need to start now. A lot of times people are waiting for the large sums of money to invest. Oh, when I can do $1,000 a month, when I can do $100 a month. But if all you have is $5, $10 a month, you can start. I mean, there's so many stocks that have decent fundamentals that easily do are trading at maybe $5, $10, $20. So you can start. And you have fractional investing these days. So you don't even have to buy a whole stock. If all you can afford, say the stock is $200 and you can afford only $10, you can start. An ETF is $200, so you can afford $10, you can start. So there's always room to start now. And even on the Nigerian context, a lot of times people might say, look, I don't earn a lot of money. Stuff out there, many people are just starting, they're starting to earn income. I don't earn a lot of money, it's fine. You have 5,000 naira a month, 10,000 naira a month, start investing in the stock market. Yes, we don't do fractional investing here, but the most expensive stock that I can think of in the Nigerian end, I think it's probably Seplat that is trading around 3,000 naira a share. So there's so many stocks that are doing 10, 20, 30, 40, 50, 100 naira a share. And you can minimum order many platforms is 5,000 naira. Some platforms, maybe the fintech platforms, they let you do 1,000 or 2,000, but it's 5,000 naira as a baseline. So you can start. More so if you're building for kids, right? So if you have a 3-year-old, 3-year-old, 5-year-old, you can start with your 5,000, 10,000. If that's what you can afford, and gradually dial up as you're going up. So as your income increases, you can then increase the amount. So don't say static. Don't say, oh, started with 5,000, now I can do 20,000. But let me just stick to 5,000. That's not how it works. Start with what you have and increase as your income goes up. Next is you want to key into unfolding themes. Now, in investing, when we talk about themes, these are scenarios that are happening. These are events that are either unfolding or have unfolded. So you can take artificial intelligence, has been the buzz for the last 1 year. You have anything AI is popping. Once stocks announce AI news, the prices tend to pop. On earnings calls, literally almost every major tech firm literally even non-tech firms, everybody's talking about AI. But in my view, I think that team has kind of run out, except you're looking at maybe the equipment angle of AI, you're looking at the cybersecurity angle of AI. I think there's room there, but the broader AI team, in my view, has kind of run. But the other teams that are unfolding, you have the reordering of global supply chains following the US trade war with countries around the world. So you have many US companies that are trying to lessen their supply sourcing supplies from China, and that's a team. What companies will benefit on the Chinese end, on the US end? You have companies that are in Europe, for instance, that are trying to lessen their dependence on the US, or even just generally countries in Europe trying to increase defense spending, trying to increase infrastructure spending. That's a team. So if you're building a portfolio, a stock portfolio for a young person, or you're in this age bracket, these are teams that they're not going to give you immediate returns, right? Because 1 year they're just starting out. But if you sit it out and do your analysis and say, where do I think the world will be in the next 3, 4, 5 years or 10 years, then you have the time and then you can invest in some of these teams. Have a long-term view when it comes to investing. A lot of times people are interested in, oh, this stock didn't do 100% or 50%, or maybe the stock is down 20, 30%. Should I sell? Should I exit? No. If you have age, biggest advantage you have as a young person when it comes to investing is time. So don't be in a hurry to exit the company because it has had 1 or 2 bad years. As long as you can see the path to profitability, as long as you understand, why that happened, why this company isn't doing well, and if I think that is going to change the tide, then you sit it out there, and that's actually a good time to increase your investing towards that company. And sometimes things happen that are out of the control of the company. So if you take COVID, I mean, COVID was beneficial to some stocks. Netflix, people were home. Zoom, people needed to make calls. On the flip side, you had companies that struggled during COVID. Oil companies, because there was consumption dropped sharply. Hotels, cruise lines, obviously usage dropped sharply. So some of these companies are just recovering to 10 to 3, 4, 5 years to recover, to get back to where they were pre-COVID and all that. So you want to kind of understand what are events happening around the world that are affecting companies. Have a long-term view. Don't look at, I mean, you might see, especially in bigger markets, stock can have a bad quarter, and the day it's announced, that stock goes down 20, 30%. I mean, even a stock as big as Facebook, there were days a couple of years ago when Facebook would just release some negative news, the stock is down 15%, 20%. So you want to have a long-term view. Now, long-term doesn't mean you hold the stock forever, but you might want to tell yourself, okay, maybe I'm going to give it 3, 4 years and then analyze. Maybe I'm going to give it 5 years and then sit and evaluate. Maybe I'm going to say I'm just going to take up the risk and hold this stock for 5 to 10 years. It doesn't work. You have time, you can always auto correct, you can adjust your portfolio. That's the beautiful thing about investing. You can adjust your portfolio as it goes and all that. So if you have any questions, please drop them in the comment section. You can also send an email to info@greentickertales.com. Remember to like, share, subscribe. It helps build the channel. We're pushing. Aim this year for me is let's get to 1,000 subscribers, and let's get to the point where we can easily go live, just do live coverage of events and all that. So, but we need to build up our subscriber base to make it worthwhile and all for everyone. So have yourselves a good day.